There's more than enough tariff revenue to lower taxes.
Tariff revenue rising to $16 billion.
And the Trump administration is banking on hundreds of billions of dollars in new revenue.
We're going to make America rich again.
$16 billion. That's how much revenue the United States government has taken in from tariffs in the month of April. This is by far the largest intake of money from US customs on record, and at a first glance it seems like it may already be having an impact on the US government's budget, because in the month of April, the United States government also happened to print its second largest surplus on record. The vast majority of the time, the government is in a steep deficit. A surplus like the one we've had in the month of April is extremely rare, let alone an extremely large one. So could tariffs already be fixing all of the government's debt problems, just as Donald Trump had promised they would? That is certainly what many media outlets are displaying on their headlines right now. And if this is true, it could mark a massive turning point in the economic landscape from an environment where the US government's fiscal situation has been absolutely catastrophic and could have led to dire consequences, to one where things are looking a lot better and could lead to many positive things happening in the future. By the way, we're currently doing a 30% discount on all our memberships. Our mission is to make profitable trading accessible to as many people as possible. So using this discount, you can lock in our membership at a ridiculously cheap price. We give you trade ideas that actually work, risk management that provides consistency, and complete transparency regarding our process and overall trading strategy. I can confidently say there's no other service like this that exists for this cheap of a price, so make sure you don't miss out because it won't last long. We recently sounded the alarm on the Treasury market, highlighting why we believe there could still be a larger decline to come in bond prices over the coming months. The US Treasury bond market has already declined by 50% since 2020 as a result of a record debt burden, but we've made the case for why the worst may still yet to come, as the US government is facing a $7 trillion maturity wall in 2025, along with continued record deficit spending. A collapse in the bond market like this could lead to pretty disastrous consequences for the US economy. It would lead interest rates around the economy to spike, making things like housing less accessible, but also reducing access to financing for businesses, which would directly slow the economy. So are tariffs really erasing all of these problems within just a single month of being implemented? The data for the month of April shows us that net government receipts have vastly exceeded the outlays, or in other words, the government took in more money than it spent. And about $16 billion worth of these receipts can be explained by the government's revenues from tariffs, which doubled from $8 billion in the month of March. But when we look at the Treasury bond market through an ETF called TLT, which tracks the prices of US Treasury bonds, we see that bond prices have actually been falling over the course of the last month and are potentially even getting ready to take out the low that they made in October of 2023. This right here is not a chart that's reflecting easing concerns around government debt. In fact, quite the opposite. This is telling us that the market is still very much concerned about the government's financial situation. So there are two potential conclusions from this. That Treasury bonds are a massive buying opportunity here because they haven't yet taken into account the fact that tariffs are going to solve the entire problem with the government's deficit, or it's telling us that tariffs really don't change much about the government's financial situation and could still be at risk of further downside. Unfortunately, we think this is the right answer. Because if we dive in a little bit deeper into the government surplus from April, we see that the total income of the US government in the month of April was $850 billion. If you compare that to the revenue from tariffs that stand at $16 billion, we can see that in the grand scheme of things, tariffs are, for now, not that significant. Most of the jump in the government's income in April can be explained by the revenues from taxes, which represented $460 billion in April, a number that was much higher than expected. But unfortunately, a lot of this jump in tax revenues was just temporary. The government received a bunch of deferred tax payments from federally declared disaster areas impacted by Hurricane Helene and Hurricane Milton. The deadline for a lot of the tax payments in the affected areas was the 1st of May. So the conclusion is that the big surplus the government experienced in the month of April is quite unlikely to be repeated over the coming months. It just doesn't look like tariffs have solved the government's debt crisis within a single month. This is why we maintain our bearish view on the US Treasury bond market heading into the second half of 2025, and why we may even be shorting the bond market at Bravos Research. Make sure you're subscribed to our website if you want to stay up to date on that kind of trade. There is a silver lining to all of this, however. Although tariffs are so far insignificant and unlikely to impact the trajectory of the bond market in the short term, they are something, and they do reflect at least an attempt by the government to try and get its budget under control, something that we haven't seen for quite some time. Every fiscal year going back to 2020 has been in a catastrophic deficit, ranging from a $1.4 trillion deficit all the way to a $3.2 trillion deficit. 2025 hasn't been very different so far until, of course, this April data point. We absolutely need to see more of these. In fact, we need to head into a direction where we have lines on this chart that look like this. That would be something that gets us much more constructive on the long-term economic outlook for the United States. This could lead to a massive economic boom. Less concerns on the government's budgets would directly lead to lower interest rates around the economy and also reduce the tax burden on the average American. Regardless of what happens next with the economy, there are going to be opportunities to take advantage of in financial markets. At Bravos Research, we're working day in, day out to help you spot these. In the second quarter of this year, we had some incredible trades with our clients. Make sure to take advantage of the discount that we're doing on our service because it won't last long.